So the Fed is about to make its announcement. You know there's a ton of opportunity after a Fed announcement, but you don't know how to trade this event. You don't know what stocks or products to watch. You don't know how many stocks or products maximum to be trading at the same time. You don't know how to game plan for the best trading opportunities. You don't know what's most significant in a Fed announcement for you to make really good risk-reward decisions. Well, in this video, we hope that we change all of that for you. In this video, we walk you through how to game plan for and trade a Fed announcement so you can grow your trading account. Hi, I'm Mike Bellafiore, co-founder of SME Capital, a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook, and I also have a cold. Click our subscribe button so you don't miss any of our trading videos that we're producing for the trading community. In this video, you're gonna learn how to trade a Fed announcement. You're also gonna learn what stocks, products to watch during a Fed announcement and right after, how many stocks, products, maximum to watch at the same time if you're a new and developing trader, or if you're a new and developing for this particular trade, how to use important technical levels to make trade decisions, what language is most important with a Fed announcement, how to game plan these large opportunities in the market, and as always, when you watch these videos, we want you to walk away with the number one reward, how to think through a trade like a pro. For those who want to learn how to trade a Fed announcement, we hope this video helps. Hey, so if you want to learn 3 more real-world setups that our traders use, including the simple strategy that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in a new window. So don't worry, you're not going to lose this video. Just go ahead and do it now before you forget. You're going to learn more in a couple of hours from this trading workshop than from years of online education. Let's talk about how to trade a Fed day, and let's use the most recent example to go over it. So before the Fed announcement, we talked about game planning certain scenarios. So we're talking about, yesterday we essentially traded from 254 SPY up to 257, 258-ish area, and we said we've got a game plan from here. If the Fed comes out with, and we game plan different scenarios. So we said, all right, we're up here at 257, 258. If the Fed comes out with disappointing language, we want to have a trade decision to hit it right away. And we want to think about what products we want to trade, how much risk we want to put on, and go from there. And we said, hey, up here at 257, 258, SPY, if the Fed comes out with really positive language, which would have been, they didn't raise by 25 basis points, we would have bought right away. We would have decided what products we want to trade, how much risk we want to put on. And then we said, all right, maybe if we're not certain about the language that comes out with the Fed, that we'll wait to see what happens. We'll wait for a trend to develop, and then we'll follow that trend. Because the thinking was, we're going to move so much after the Fed announcement. It was, you guys sat through the first Fed announcement that I can remember in at least 6 years, where I felt there was uncertainty going into the meeting. I think a lot of market participants felt there was uncertainty going into the meeting, such that there was going to be a really big trade opportunity. And so we talked about, for trading a Fed day, essentially, and Ron, I think you asked this question, well, how many stocks or products do you want to look at? And I said for a new and developing trader, 3 is probably fine. And we talked about taking a look at SPY, and we talked about taking a look at a volatility product, and we talked about looking maybe at another ETF. So products to trade for those who are developing a new, SPY, Q, IWM on the market side. Volatility products, VXX, UVXY, TVIX. You brought up a really interesting point, and we'll sort of share it with everybody else, which is, so not everybody has a huge book. Not everybody has a huge amount of buying power, like perhaps at a prop firm. So because of that, you may want to look at levered ETFs. So what was the levered SPY ETF that you look at?
I traded SPXL.
SPXL, and then were you looking at one of the volatility levered products as well?
Yeah, I just use VXX.
Okay. Anyone trade TVIX or UVXY?
TVIX.
So you might think about that. If you're sitting there and you're a retail trader at home and you really want to get more bang for your buck, there are triple ETFs, double ETFs that you can look at to sort of mimic what's going to happen in the overall market and get a little bit more bang for your buck. More risk to give things a little bit more room, but totally something to think about. And I actually think even prop traders think about that as well, which is, hey, maybe I'll just use some of these levered products. So those were essentially the things we were looking at. And we said if you're more experienced, you might be able to look at gold. That might be a good idea. If you're more experienced, maybe you would look at bonds. If you're more experienced, you might look at market play stocks, so the Apples, the Facebooks, the Nvidias, the Teslas, the Netflixes. Those are fine, but when you're new and you're developing, you really don't need to do much more than think about beforehand, hey, what are the 3 products I'm going to trade of SPY, Q, IWM, VXX, UVXY, and choose, maybe TVIX. And so going into the report, what we did prior to that, going to the announcement we did prior to that was game plan the different possible scenarios that would come out from the Fed. If they raised 25 basis points and the language was more dovish, what are we going to do? If they raised 25 basis points and the language is not more dovish, what are we going to do? We even game planned if they cut rates, which we knew wasn't going to happen, what are we going to do? If they keep rates unchanged, what are we going to do? And going into the meeting, most people thought they were going to raise 25 basis points and they were going to be a little bit more dovish with their language. And that's what was going on. And while we were walking up from 253-ish up to 258-ish on the SPY. And so, we were at, in a short-term trading perspective, we were a little bit more elevated than we had been. And if we weren't going to get a good Fed announcement, we were going to trade lower. And we talked about that right before the announcement. And what's interesting about that, I think this also brings up how it's important to be open-minded as a trader, because at the beginning of the week, we were really talking about how this was going to be a really great buying opportunity when we were down towards the lows. When we were down towards SPY 253, we were talking about, man, if they don't raise rates, and what was the odds going into, it was below 70%, actually going into the, like 67%. So it wasn't a slam dunk that they were going to raise rates, but we were sort of saying at the beginning of the week, wow, we're at these price levels where if they don't raise rates, and that's a real possibility, we could have this huge buying opportunity. And we were game planning what to do from the buy side. And then we traded up towards higher levels, and we said, this is the inverse of what we actually were thinking about, and so how do we game plan to short? And so we come out, we open up, and we did have an opportunity right away to short the market. And so the announcement comes out, and we won't necessarily bore people with all the details, and it's really not that important. What's more important is how did the street react to this? But we spike up towards that 259 area, that first move. They raised rates 25 basis points. They were coming in with 2 raises in 2019, which was down from 3 raises that the market had forecasted prior to the announcement. And but we were up against, like 260 is a pretty big level, and we're sold up so much. So I got short up there at that 259 because we're up against a longer term resistance level. We had spiked up a point right away. And then, the news that came out wasn't better than we had really expected. And so I put it out. And we had a pretty big down move right away, covered some, and then held the rest. But as we went on, and as the day goes on, some more news started to come out. And Dr. Steenbarger talked to you guys about this at the beginning, which is during the Q&A, it came out that they were gonna disappoint the street in terms of what they were gonna do with their balance sheet. So it was thought and it was hoped from the market participants that they were gonna take on a little bit more on their balance sheet and potentially add some more liquidity back into the marketplace. And Powell flatly said, no, we're not gonna do this, that QT is more on autopilot, and unless the data shows us something different, then we're just gonna continue on with our plan. I think a lot of market participants thought he ought to have a little bit more flexibility with that, and that was a surprise. That was now a situation where we were getting an announcement that was more negative than we had hoped. And we're up towards these elevated levels. And so, we have that pretty big down move, we get a little bit oversold, and we go back up towards, that 257-ish area, leak a little bit through there, fail, and then reclaim VWAP again to the downside. And so you could start, we go back up, we make a lower high, and you can start to trade that against that 257-ish area on the short side, and then we pull in a bunch, and then we start to form this range, which I thought was really instrumental. If you'd done nothing the entire time, if you hadn't game planned anything, which you should do, that's a good best practice to take away from this. And we'll do this on all the big trade opportunities. We'll game plan this out, and we're going to walk into some really big trades by doing this. But even if you hadn't done any of that, what happens is we trade to the bottom of the range. We're through the bottom of the range. We've got this negative news catalyst, and this is a big deal. And so, Dr. Steenbarger walked you through, I don't want to really give away all the secret sauce to that, but he walked you through why this could be a game changer and seem as a game changer by some of the bigger players in the street. But essentially, you've got this really negative news catalyst behind you. And then you get a range that's developed. You get a nice range that's developed, and then we get below the bottom of that range, have another hard down move, and then we get another range that's developed between 252.25 and 252.25, and this 250 level, where they did a nice job of shrugging that off. And so after we have this bad news that gets out, we go up towards this VWAP area, leak a little bit below it, and then fail again, start to have some big, pretty deep candles. And then, once we're below the bottom of this range right here, this 254-ish area, and it's showing you that it can trade lower than that, we're looking for those consolidation areas where we can lean against on the short side. And because the catalyst is so strong, we said 250 was in the cards if we got a negative news catalyst. We didn't think the negative news catalyst was going to be the balance sheet. We thought potentially maybe they weren't going to be more dovish on their comments, but it's still the same, right? So, you can certainly lean against that. And I thought, even into the close, this 250-225-ish area, we can't get above it, and then we put in a little bit of a double top again, and we start to roll over, and that helps us to run towards the lows. But when you have a catalyst like that, just remember we were trading at essentially 253, 254 before people started running up the marketplace into that meeting, and then we got negative news. And so whenever you can see resistance areas where you can control your risk, you want to lean against that. So you want to lean against something like this failed VWAP area. You want to lean against these resistance areas, particularly when we make a new low. You want to think about playing a momentum break to the downside when we get below this area right here, below 245. You want to think about leaning against the resistance area here at 252.25, that 252.25-ish area. And then, on a day like today, if you are a big money trader, can you get out of your longs in one day? Not even one day, in 2 hours. Can you get out of all your longs in 2 hours? And so it set up a pretty good trade for us again today, right? We had the 250 level that we were talking about, the 252.25-ish area, and we're getting continuing weakness to the downside. So when we're seeing resistance on SPY, we can look for strength on VXX, type of TVIX. As the market's going down, volatility should be going up. And we get a nice hold here around this 11 to 11:15 area where we're holding above VWAP, and we really start to trend up there around that 11:15 area. And then how were we doing yesterday during this time? So we get that, around the 2 o'clock announcement, we get that huge spike, and we get above the high at 58. Had a good run up to 61. The key was really during that Q&A when Powell was asked a question about his balance sheet, and they were not going to change. He signaled the Fed was not going to change what they were going to do there. So a good opportunity. Again, while this is a Fed day, and while we talked about preparing and game planning for a Fed announcement, this is really part of a bigger trade, which is game planning a large trading opportunity. So there's going to be a trade that comes up in Facebook pretty soon. There's going to be a trade that comes up in UXIM pretty soon. There's going to be a trade that comes up in Twitter pretty soon. There's going to be a trade that comes up in some of these semiconductor stocks pretty soon. So it's sort of the same thing. We may have a bounce play that we'll start to game plan out for the overall market pretty soon. It's really part of that bigger picture. So I got asked a really good question about trading after a Fed announcement. And the question was, hey, you talked about not spreading yourself too thin, not trading more than 3 stocks or products at the same time. Can I just focus on one stock or product at the same time? And the answer to that is yes, of course. If that's particularly when you're starting out, and even if you're an experienced trader and you're trying to add trading a Fed announcement to your playbook, you want to show proof of concept. You want to prove that you can make money in this particular type of setup. So you kind of go slow and you go small. And one of the ways to go slow and small is to not trade too many products. So you might just trade one product. And one of the ways to go small is obviously not too much risk overall for these types of trades. Anyway, one of the guys wanted to know, hey, can I just trade one of these levered ETFs and stick with that? And I said, that's fine. And then he said, well, what's the advantage of trading 3 at the same time? Why not just pile into one? And the advantage of trading 3 at the same time is that you're not sure which one's going to be best. So if you're in a volatility product and you're in a market ETF, and then you're in one of the high beta names in Apple, a Facebook, it could be that you're short the entire market, like we were in this video, but volatility severely outperforms the overall market. Or it could be that one of the, Facebook yesterday, it could be that one of the high beta names really outperforms your market ETF or your volatility product. And then when you're in all three of these products, you see which one is working best and you can put some more money into that particular stock or product. Or if you're in three of them, one of them might offer just an insanely good risk-reward opportunity that the other two don't. And you can, because you're watching three and not just one, you can pile more money into that opportunity and really overall capture more from that overall trading opportunity. And again, while we talk about this as a Fed announcement, I do want to make the point that game planning is super important for large trading opportunities. I do hope that you take away this idea that, okay, we're game planning for a Fed announcement, and okay, the title of this video is How to Trade a Fed Announcement, but what this really is about is getting into the habit of game planning a really large market opportunity. That could be a market bounce that might be coming up. That could be a bounce in Facebook that's coming up. It could be, we had great opportunities this year in the pot names. That's going to keep coming up. And if you keep doing that, you're going to put yourself in a position, if you keep game planning these big trading opportunities, you're going to put yourself in a position where you really capture them big and have huge, huge winners that could take your trading to the next level. Hey, so go ahead and click our subscribe button so you don't miss any of the trading videos that we're producing for the trading community. And please add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, happy holidays and train and trade well.